Hello and welcome to Blythe Business News. For this edition, I'm joined by Gavin Ferrar, who is Chief Executive Officer of Central Asia Metals PLC, otherwise known as CAML. CAML, its ticker, trades on the AIM market in London, has a market capitalisation of around £316 million sterling. The company has just announced its interim results. Gavin, welcome back on this show. For a start, please give us an overview of the operational highlights.
Thanks, Tim. It's great to be back. So Kounrad, our copper project out in Kazakhstan, delivered another reliable half of production. We produced 6,218 tons of copper cathode there at cash costs that are sit in the lowest quartile of all the copper producers in the world. So that was a really great result again from Kounrad, and it's on track to meet its guidance of 13 to 14,000 tons. At Sasa, we had zinc production of 8,692 tons and lead production of 12,613 tons. And we've also completed our capital programs at Sasa, which is one of the important milestones that we reached in the first half of this year with the commissioning of our dry stack tailings plant. Now, we had some challenges at Sasa, I think it's fair to say, and the ore body is much more variable at depth than we were expecting. And that's resulted in head grades falling below the planned levels at Sasa, which has resulted in a modest downwards revision of our 2025 production guidance, which we gave early July this year. The new revised guidance is 17 to 19,000 tons of zinc and 25 to 27,000 tons of lead, which is, as I said, a little lower than we planned for the beginning of the year. So one of our key priorities really in H2 now is to increase the geological understanding of that Sasa ore body. And that includes by doing some additional drilling. We've also got some in-house initiatives, as well as help from external consultants, to make recommendations about productivity and various other areas that we think we can improve at that mine. And we should start to see some of those sort of bearing fruit through the second half of this year. The context of all of this has been, we've produced metal in a very safe environment, and I'm very pleased that we had no LTIs at either site for the first half of this year.
Let's just look at the financials now. Can you give us a summary of how the company's performed during the period, during the half year?
Sure. Well, it's another solid financial performance in spite of what I said about Sasa, where the revenue's clearly been impacted by lower production. We turned out group revenue of $99.5 million for the half and EBITDA of just under $40 million, so an EBITDA margin of 40%. Importantly, our balance sheet remains strong with a lot of capacity for growth there. It's really flexible as well. And we've also got, at the end of the period, $47.7 million in the bank. After the end of the half as well, we also realized some profits through the sale of our shares in New World Resources, which is a company we were trying to acquire and ultimately were unsuccessful in. So there's another $18.7 million received on those share purchases. And a break fee related to that transaction as well, $1.6 million. So a really solid cash position that we're in alongside a balance sheet that has no leverage on it. We've announced an interim dividend of 4.5p. That's been, that'll increase the amount returned to shareholders in dividends since we started paying dividends to around $391 million. So, almost the same as that market cap you just mentioned there, Tim. But in addition, our people will have noticed that we've, the level of dividend has gone down. But what we're doing instead here is put a share buyback program in place. So it's around $10 million, so at least up to $10 million of shares will be bought back. And that'll take the total return to our shareholders for H1 to just under $21 million, which is actually very similar to what we were paying in the past and what we paid over the past few periods as well. So just adding a little bit of a different part of the total returns to the shareholders there. Why are we doing that? The dividend supplemented by the buyback is really the first step towards moving back into our dividend policy. We've had a policy of 30 to 50% of free cash flow as a dividend policy. We've paid outside of that several times in anticipation of getting a deal, a new sort of transformational transaction. And we've taken a lot of learning away from that New World Resources process I alluded to earlier, and one of which was that having a little bit more cash in the bank to facilitate that growth is going to be super helpful to the company and therefore to our shareholders as well.
Okay, so thanks for that financial and operational update. Let's now look at Camel's growth opportunities, including Camel X and Aberdeen Minerals. What can you tell us about what that looks like in the future?
Sure. So look, the two you mentioned, Aberdeen and Camel X, are really the long-term growth opportunities for Camel. At Aberdeen's Arthrath project in Scotland, phase two of the drilling program is underway, and that was following up on some very encouraging phase one drilling, which effectively proved the geological model there. Or I should say phase 2B and phase 2A. It all gets a little confusing, but let's just say the previous drilling program effectively informed us where to drill this one. We're now drilling it, and look, we're trying to build on that those positive indications from their first program, and that'll inform us as to whether or not we continue supporting Aberdeen moving forward once we receive those results. Camel X, we've got 4 licenses active in Kazakhstan now, and we've been doing early stage sort of geological exploration and fieldwork on that. That's geological mapping, geochemical sampling, geophysical surveys have been done, and all of that information will be collated over the winter, and we'll be making decisions on whether or not to follow up with the drill rig in 2026. Alongside these efforts, we spoke a little bit about New World Resources. We're still looking to grow our business through that material transaction. And I think a lot of people had a few doubts about the ability to do that, what kind of thing we were looking at, whether the management and board were entrepreneurial enough to go out and look for it. And I think the New World Resources transaction, even though we're ultimately unsuccessful there, really, drew a number of positives from that, right? Now, first of all, we were able to identify an asset that wasn't part of an auction process. We pulled together the finance for that in an undilutive manner, and we also got really good feedback from our shareholders, particularly the major shareholders, who certainly indicated the support for the transaction initially, and then also the support for the discipline we ultimately showed in withdrawing from that process once the interloper appeared and pushed the price up to a point where we no longer thought it would make sense for anyone to keep pushing that up and chasing that up. So we're still determined to find a material transaction for the business. We think it's important that Camel grows off of the solid base that you mentioned earlier, and we continue to assess potential opportunities in that regard.
I mean, the confidence that you just mentioned there, that the investors, the bankers showed to provide you with finance, must give you confidence for the next one, whenever that might be.
Well, the big challenge is actually identifying these things. I think is what we've ultimately come to the conclusion. And then we took away a few lessons from that process. I think it was unfortunate that what we did do is unearth a sort of previously unloved, but high quality asset, and somebody saw an opportunity there to come in and outbid us. And as I said, ultimately we had to make a sensible decision, to preserve our value and our and I think that if people were worried, that is the disciplined approach that we had. Every step of that was scrutinized very heavily by the management and the board. So whilst it might have looked from the outside that there was a sort of crazy auction process going on, I mean, it was pretty sensibly run, and I think the ultimate decision was a very sensible one.
Looking to the future, you've just done the first half of the financial year. What can we expect in the next few months? What news should we be looking out for from Camel in the coming months?
Well, hopefully it's really dull from a news flow perspective, particularly on the operations, Tim. We like to keep it kind of boring there. But as I said earlier, we are faced with challenges at Sasa. So a core focus for us is really increasing that geological understanding of that ore body. As we're getting deeper within the ore body, although we've drilled it, there's still a lot of variation in both in terms of width, sort of dip, strike length, grade, even between 25-meter drill centers on that. So, as I said, we are going to be doing a little bit of additional drilling, and we've got a whole bunch of other initiatives just to improve the mining productivity, and also just, we're still learning a little bit with the new mining methods we're implementing as well. So there's definitely room for improvement there as well. So that's going to be the key for us as well, is to, focus on really getting Sasa up and running to the extent that we wanted to. Now, as I said, there's a bunch of in-house initiatives we've done there, but we're not arrogant enough to think we can solve all these problems. So we have brought in some external consultants to help us and to see if they can identify some opportunities which we haven't. So, together we'll get a list together and we'll implement that list. And, hopefully by we'll start seeing the fruits of that sort of labor at some point. As I also said, the capital programs are now finished, but we continue with this transition to paste fill mining methods. And the key thing there is just going to be building out that dry stack tailings landform. So that was a phased development approach there. So we're currently depositing tailings onto what we call phase A. We got to start, preparing the ground for phase B, phase C, so that we've got a facility there that's going to last the life of the mine. And that's a piecemeal thing. We lay out, for example, there's a layer of what we call geocomposite that we put onto the ground to seal the dry stack tailings thing. So you can't put that all down at once. You've got to put it down piece by piece and then lay some on it, because otherwise it could blow away in the wind or get damaged. So this is a kind of continuous construction process from here on in. So that's going to be something that we'll be focusing on as well. And then hopefully we've got some exciting updates around Aberdeen Minerals and the Arthrath project when we get the results from that drilling in. And of course, Camel X, if we can, get some drill targets ready for that, that'll be great news by the end of the year as well. And in the meantime, informed by that experience that we gained on the New World Resources, failed transaction, we continue to look for a material transformational transaction. And, we've got that balance sheet that's really going to underpin any of those, ambitions of ours.
Gavin, thanks for that update. We look forward to seeing you in the future. Come back, keep us informed, and we look forward to hearing about future developments from Central Asia Metals. That was Gavin Ferrar, Chief Executive of Central Asia Metals PLC, giving us a very sound update on their interim results, which have just been announced. That's it for this edition of Blythe Business News. Thanks for watching.